بسم الله والحمد لله والصلاة والسلام على رسول الله اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. السلام عليكم ورحمة الله. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Wednesday, the 20th of November 2024. I'm doing the pre-market analysis. I'm viewing right now the NQ on the 15 minutes time frame chart. Now, just to show you the targets that I'm looking at, we first start with the higher time frame. Slide these. Just this, the dates and weeks as well. All right, so last week we closed here, price traded down lower towards this bullish breaker. So now people will be considering this as a bearish breaker. You have this small liquidity void and this volume imbalance. So we're looking at this. See price, I was respecting it here. On yesterday, price retraced all the way down lower, took out the sell side liquidity and retraced into that volume imbalance and then traded up higher. But that's not our concern today. Since price has attacked the buy side liquidity and the external range liquidity, it has retraced into the internal range liquidity. So now what we're aiming at, we're aiming at some terms of or some kind of an external range liquidity one more time. What would be an external range liquidity in this case? Since we have, let's start the script from here. You see price created a low here and it started running up higher. It traded up higher, took out both of these relative equal highs, and then started running down lower. At this point, we'll be aiming for something like this volume balance right here, because we took out the relative equal highs. Now, you don't be like expecting price to take the other side of the range of the liquidity, because it's always internal to external and from external to internal. So here we took the external, we traded up higher, and we took the other external. This is an internal range liquidity because it's within this range. We took out the internal range liquidity, and then we took the external. After we took out the external range liquidity, we'll be aiming at what? The internal range liquidity. And we in fact seen price trade down lower. This would be the volume balance here, the internal range liquidity, the rejection block, the mid of the constant of that discount wick at the time when we were trading here because it's below us. We took out the internal range liquidity and that was animated to the downside and took out the external range liquidity, which is this low right there. From here, we'll be aiming for something like this favor gap that has been formed and for this liquidity void. And after price has closed, you see this is the elections. So they are pretty much, you try to minimize trading on the election week because you can see this type of price action. You see, like here when we were trading at this point, when price broke down lower right there, we were expecting price to continue running down lower, but due to the elections, it is highly manipulated by the smart money or the people who are in charge of controlling the markets. They pretty much control the price of pretty much all of the asset classes, but I'm now focusing on NQ. They did control it and push price up higher and taking out this external range liquidity. It continued running up higher, and after the elections, President Donald Trump has won the elections and became the president. We have seen some of the consolidation after this large range days, 3 large range days here. We've seen some kind of consolidation. After the consolidation, we took out the external range liquidity. We expect some kind of a retracement into an internal range liquidity. We retrace into this favor gap. Well, next target would be this favor gap, and then later on would be have looking at this volume imbalance. How would you trust which favor gap price is going to stop at? Now, you might ask yourself this question. Price did create this favor gap. Now, price did trade down here. You might question yourself, is that enough? And will price from here trade up higher? But, this is where experience kicks in. And there's nothing pretty much at the moment of recording this review. This is the 20th of November 2024. There's nothing pretty much mechanical that I can give you so you can pretty much know if this is the actual favor gap that's needed or not. But one thing I can give you is like looking at the premium and discount relative to the premium discount. Because if price really wants to run up higher, continuing up higher, or it just want to have a retracement, it's going to retrace into discount if we're in a buy program. So if you take the Fibonacci and anchor it from this low towards this high, you see that we're below the midline or the equilibrium of that range, trading range or dealing range. So we traded below that, which means this area right here, where we traded below it, is considered a discount area. So we traded into discount, and if I show you the OTE levels for the people who are trading OTE, here they are. You can see how price traded to the first level here. Was very shy from touching that second level, which is the 0.705, and then started running up higher. Now, what is this? This is a fair value gap, but we'll be looking at this as an inversion, a futuristic inversion fair value gap. Why? Because we want to see price push up higher towards the the external range liquidity right there. Buy side liquidity. So the buy side liquidity. And for the people questioning or asking, did I take any trades the last 2 days? No, I didn't, because there were no any um, high impact news drivers. So because of that, I didn't trade. It's not something you shouldn't be trading every single day. You have to pick your shots, act like a sniper, and just pick the shots that are needed for you to trade them. Don't be recklessly trading every day, just pushing the buttons. No, this is a game where like your mentality is like 95% of the equation to become a successful trader. Because if you think about it, if you take a second and just ponder about it and just think about it, that pretty much there's two options to do. It's either buying or selling. You either be buyer, go long, or either be a seller, go short. Which means that this will put the majority and most of the traders at 50% win rate. Like they're either gonna be winning or losing. And if you're just like like throwing a coin and just buying if it's heads or selling if it's tails, you'll be having 50 approximately on the long run. You have 50% win rate because of the probabilities. Pretty much a game of probabilities. If you don't know math, you better go learn some math. Anyway, so but how come that more than 80% of traders are losing traders? Because here comes the interesting part, or the important part, if you want to say, that their psyche, their mentality, their mindset is what makes them a losing traders. They might be in a winning trade, but because they trailed their stop loss way too tight, or they try to get out when they're in a drawdown, where prices was just accumulating some orders before it ran up higher or run in their favor. You see, like a lot of times traders will just, when they exit the trade well in their drawdown, the market will just start running in their favor as they were expecting. This means that what they anticipated in the first place was right, but because of their mentality, because they couldn't stick to their system, to their model, to the strategy, they fucked up. And what is the main reason? It's their mentality. It's their mindset. So just to refine it a little bit more, you have to be careful for your mindset. You see, like don't let your mindset, don't look for a get rich quick scheme here. Trading is for the long run. Trading is a career that you pretty much embrace for the long run. You be a student of the markets for your life. There is no like ending to this. If you're just thinking about this field or this trading as a thing that you're going to be doing for just temporary or for short term, and then you will stop, then you're pretty much just wasting your time, and you're better off doing something else, because here you'll be losing money, which is guaranteed for every single trader. There is no trader that is just pretty much winning all the time, 100% win rate. There has to be losing trade. Even like the best traders in the world, they when they started at the beginning, they lost a lot of money. So you cannot escape the idea that you're going to lose money if you're starting this. And for people who are trying to get into trading because they think that they want to get rich quick, something of that effect, I hate to break down the sad news to you that it is not a thing for you to be doing if you're trying to get rich quick. Because although you can pretty much do yourself a very good living if you stick to it, that's the only option, that's the only factor that pretty much changes everything, that you have to stick to this. Otherwise, you'll just be losing your time, your money, and your energy on nothing. So this is just branched off the idea why I don't trade every single day. People will be saying every single day is a trading day, and I do like disagree with this. Not every day is a trading day. Like, let's talk about these days. Where were you? Show me your P&L in these days. That's what I'm saying. So you can check the my Twitter account. I did take some trades on Thursday, and I think on Friday you can check my Twitter account, or no, it's called X. You can check them out. I have them posted on my account. But anyway, now since price has traded into the internal liquidity, we're looking for price to continue running up higher because we're in a buy program to the external range liquidity. That's the external range liquidity. So if price is going to run up higher here, we're looking for price to pretty much be supported with the PD arrays that are residing in the sell side delivery of this move. So you think about this as a market maker buy model. This is the original consolidation. The price broke down lower, smart money reversal right here, and it's going to run up higher towards the original consolidation. So just think about this. Think about this as a market maker buy model framework. I'll go down lower to the 15 minutes time frame chart. So this is the favorite gap, that is the inversion favorite gap, to be listed as an inversion favorite gap on the daily time frame chart. And we have here the original consolidation right there. So these will be like relative equal highs here. And this is what I'm thinking price is going to draw to either this week or early next week. So just to keep everything now, before going down lower, actually I would just want to talk about the so since we are looking for price to trade up higher into the external range liquidity, that would be the terminus. This would be the terminus. The terminus is your end target for this run. Any specific run that you're trying to trade have an origin and a terminus. Um, you'll be starting the origin. It could be somewhere from here. The origin can be subjective because traders do identify opportunities at different times, but when we reach at a certain point, it's too late. So if, let's say, we consider from this high to this low, we're pretty much at discount here. So if you're trying to go long, your best bet is to go long. I need to know, this is the dealing range. To go long below this line here. Below this line is, and you can also, the best longs is to be in the lower um, quadrant. Sorry, in the lower quadrant is your best longs, right here below this level. I'll keep it for you to check in for the targets that I'm aiming at, because this is the terminus. I'm looking for something as a low hanging fruit. This is what I live by, and it will give you more than you ask for. You don't need to look for targets all the way up here. This is achievable, but this is not the right way to go about the markets. When we're trading the markets, you just try to go for the low hanging fruit at the beginning. Once you capture and pretty much lock in your low hanging fruit, you can hold a runner to the terminus, but you must take something out of the market. You must pay yourself. You must pay yourself. You must pay for the time that you spent analyzing or doing your studies on the market. You must pay yourself for the time that you have put to study the actual skill set, to study how to trade and to watch these videos, to do anything that's related to to the trading. It could be reading books, it could be whatever you're trying to do to enhance and sharpen your skill set. You must pay yourself for that thing that you've done. So how to do that is by always looking for the low-hanging fruits and taking something off at them. What are the low-hanging fruits that I'm aiming at? The high of this candle, which makes the low of this fair value gap, the low of this fabric gap, which is this candle's high, the high of this fabric gap, which is this candle's low, and we have the midpoint, which is the fabric gap concept encroachment. I have the levels here, you can check them out. I do also have some alerts to be alerted that price has reached there. Now going down to the 15-minute time frame chart, yesterday, you can see how price traded down lower here, took out both of these sell liquidity, and this is a good thing that price has done so. Why? Because if you think about this, we have uh, low, high, low, low. Before we started here on Monday, price did rally up higher from the high here, and then broke down lower to take out the sell liquidity. If the price is going to run up higher, it wants to clear out all the sell liquidity. Pretty much when we broke down lower here, a lot of sellers have shorted based on the breakdown, and maybe their buy stop is like somewhere here, or the stop loss somewhere around here, or somewhere around here, as this is a means of resistance, and we just sweep them out of the market. I'm not going to go into the paradox between the retail traders and what we do. I'll be discussing that in another video, but I'm trying to show you what price has done lately. We broke down lower, took out the sell side liquidity here of last week, and then we broke up higher here. This candle here is a bullish breaker. I don't know if you've noticed that, but if in case you didn't, this is a bullish breaker right there. This is a bullish breaker. So bullish breaker, price is consolidating here. You can see that we have London's low here. Let's drop down to the 5-minute time frame chart. And we have London's high here. Buy side liquidity. It's a minor buy side liquidity. Buy side liquidity. London high. Sell side, it's also a minor sell side liquidity. London low. Now, what do I want to see price doing? I want to see price first running down lower, taking the sell side liquidity here of London, clearing them out because a lot of traders are now in this run here. And perhaps if price wants to extend beyond the sell side liquidity here, where it can reach to, Ahmed, to which level can we see price reaching to if we broke down below this low? If price broke below this low, what can we look for the next level that price might stop at and start reversing to the upside? It's over here, the bullish breaker. So if price break down below the low, I'll be expecting it to be held by the low of that favorite gap or the bullish breaker right there. It can take out this side liquidity, walk into the bullish breaker here. We have a small favorite gap here if you can see it. Here. Price might walk below this low, reaching to this favorite gap, bullish order block here, and then continue running up higher, taking out London's high, reaching to the targets that I've mentioned earlier on. So this is just price, this is just a pre-market analysis for what I think the market is going to do today. It can just run up higher and continue running up higher from here, and it can break down lower and just continue running, breaking down or taking down lower until maybe taking out this low. But this is not what I see. Gun to my head, this is what I've mentioned now is what I see the market doing. Otherwise, I don't see the market doing anything else. So I really hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.